Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is October 14th edition of Market Outlook. Please be sure to participate in our investment sentiment survey, and we'll be happy to send you results. Also, if you like our commentary and this video, don't forget to sign up on our website to get it free every week. So, we had probably one of the worst weeks we've had in last 3 or 4 months. We were down over 2%. And let's take a look at the charts and see what they're telling us. First of all, we're going to go through the key indices and the VIX and the usual roundup. So stay tuned here. First of all, you can see that we have a I'm going to move this trend line out of the way. But in the Dow, we basically closed by the end of the day right at a rising 50-day moving average. You can also notice that we have fairly low volume on this particular sell-off over the last 2 days, and the big sell-off that occurred on Wednesday on really big volume, many times the normal volume. We have a normal volume of about 4 million in the DIA ETF, and we hit over double that. So this day here is a particular key day, especially the fact that we're holding this rising 50-day moving average. But it's pretty important we hold here. Now, what's interesting is that this bar right here was the day that they announced QE3. So we're basically testing once that announcement was made. This other extension here was the comments by Draghi, the ECB. So we're basically holding that initial level. But we're definitely getting a little bit long in the tooth here on this sideways to slightly up movement after the big announcement of QE3. So what happens here is pretty pivotal. I can pretty much assure you that the markets are not going to be stable quite at these levels, and especially with the upcoming election. You're going to have people moving this market one way or another. But meanwhile, we're starting on a daily basis, not quite there, to get a little bit oversold. So I wouldn't be surprised to see the tape being painted with a test of this 50-day and ultimately another move back up. On the other hand, we've got to let the market tell us if it is about to fail here. You're going to see a test probably down to the 129 level in the Dow. So that's good for another 3-4% down move and a test of the 50-day, the 200-day moving average. Let's take a look again at the monthly chart. The monthly chart, you can see that the long-term from 2009 core primary trend line is well intact. We have a slightly moving, sloping up 80-month moving average. However, we've also been contained on a closing basis at the upper part of this wedge. So this rising wedge, a couple things can happen. Obviously, we could accelerate out depending on what happens, with the overall economy and obviously market sentiment. Or you can see that this is a pretty steep trend line. I'm going to put in another one right here. And you can see that we have a pretty steep monthly trend line, the accelerated one taken from the lows of 2011 to the lows of this year. It's a valid trend line because we made a new high. So again, there's some support. I mean, on a monthly basis, you can certainly correct quite a bit, even all the way down to the, again, that 129 level or so this month, and still be within this longer term monthly trend line that would still be intact. Although, again, it would be definitely suspect and create a lot of concern about the overall strength if we indeed got below the 130 level in the Dow, because you're talking about the opening of the month of September, and obviously the core value in August. So if we take that out, most likely we'd get a test, and it could be even more severe. Let's take a look at the spiders. Spiders closed just under the 50-day moving average, down 0.4%. Now, they didn't have that same type of volume climax on the downside early this week. You did have higher than normal volume on a distribution day on the big down day earlier in the week. So right now we're sitting right on that 50-day moving average, the rising trend line as well. So critical support, if we break through, really should be around this 139 to 140 level, but ultimately the 200-day moving average comes in around 137. So, let's watch for this. You can also say a key component here is watching this trend line as well. If you get through this trend line, which is a valid trend line because you made, right, you had a high, a low, a lower high, and now a low. So you've got enough to put in a valid trend line. If we break out through here, ultimately, you're gonna see most likely a sustained move to the upside. On the other hand, you also, on a shorter term basis, have the ability to take out the last couple days worth of action in here. You can see the volume is not really huge. If we can get through this 142.50 to 143 level, take out 1, 2, 3 days worth of action, you can certainly see a nice test at least up to the top of that trend line. Now let's also take a look at the Qs, because I put in an interesting retracement. Now, because of the weighting of Apple and some of the other NASDAQ stocks that have been under pressure this week, including Amazon and Google, you got a pretty nice sell-off. So what I did here is, if you take this range from the low in June to the high here in September, and draw in Fibonacci retracements, you'll see a 61.8% retracement, which is one of the critical Fibonacci retracement levels, is being held on NASDAQ. So again, we want to see this hold here. Another thing to point out is that we are trading at a oversold condition. Now, we also, in the Qs, had sort of this blow-off volume day. You had, in volume, well over 2 times the normal volume on the big sell-off day here. So this is also a key component, and that's right at that 50-day moving average. So again, you want to watch this key level here. We are below the 50-day moving average, but it is rising. We're also sort of trading at the lower end of the Bollinger Band. So in accordance with the convergence of things, potential retracement to the Fibonacci level, oversold on the RSI, potential blow-off on the sell-off day that really hasn't quite held. But again, if we can eke our way back around here and bounce off of here and start eating through this key day here and through the 50-day moving average, we'll be back in better shape. Okay, let's talk about some of the market internals. VIX, you can see the VIX indicator here still within the middle of the Bollinger Band. Yes, we on this sell-off we did have a bit of a bounce, but basically trading nicely under the 200-day, trading around the 50-day. We've sort of been moving around above and beneath it. Wouldn't put too much credence in it, as it's sort of just chopping around in the middle of this above and beyond the Bollinger Band, which also now is containing the 50-day moving average. So I would sort of discount that, focus on the Bollinger Band, for extremes, and the 200-day moving average, which is still trending down nicely. So sentiment is what I would consider in a positive mode under the 200-day, not excessive exuberance either way. You can say the same thing for a weekly basis. Now let's go look and take a look at the longer term, the overall market internals. And on a longer term basis, which we look out, for about 1 to 3 weeks or a little bit more, the McClellan oscillator, you can see we generated a sell signal back here in mid-September, sort of almost generated a buy, didn't get quite down, but close enough, and we got a decent sized bounce. So I would say right here on a intermediate term, or what we would say a little bit longer term if you're doing the swing trades, the McClellan oscillator is sort of a neutral to slightly positive reading, considering that we're going to consider this a bounce off the lows, another test, so not too bad. In terms of the shorter term internals, advanced decline, you can see that we bounced nicely up at the end of September. You generated a buy signal. The same thing for up-down volume, which you're still on. So overall, market internals, believe it or not, with this sell-off, have basically remained steady. We're going to take a look at one more thing. Let's take a look at the TLTs, which is rates. So you can see this week we had a pretty nice bounce as the market sold off, maybe a little bit of a flight to quality here. Of course, as you know, the TLTs, U.S. Treasuries, definitely seem to be in its own little bubble here. Probably one of the most overinflated asset classes or assets on the planet right now, considering our level of debt, the fiscal problems, et cetera, and the downgrade. TLTs, which represent 20-year Treasury bonds, definitely overall acting okay, although you can see we have a declining 50-day moving average. So it's going to be interesting to see what happens here. The last time we attacked the declining 50-day moving average, or flattening, it failed. It failed right at that level. It popped above it for a day or two, causing the most amount of pain for people that specifically just watched that moving average, but then proceeded to plummet. Now, potentially that setup here, you can see on Friday, we popped above that declining 50, closed on the lows. Let's see what materializes. Longer term, it's hard to imagine rates getting much lower here in the U.S., but nonetheless, it is a bubble and people have nowhere else to go. So they are purchasing our treasuries even as we print and print and print. So anyway, have a great weekend. Hope this helps. Let's watch those critical levels in the market. You can see that we got a nice convergence of a lot of support levels here. Let's watch, see what the market tells us. Very, very important to see how the market responds, as this is the level where the market took off after Bernanke announced QE3. Thanks, and bye for now.